When I was a losing trader using price action, I thought all I had to do was memorize a cheat sheet and buy and sell when the patterns show up. For example, I took every hammer signal. I won some, I lost some, but without factoring in support and resistance, it was death by 1,000 cuts. How many times have you entered on a hammer and then price does something like this? Support and resistance is a vague notion most traders have heard of, but once the idea becomes clear, you can eliminate so many of your bad trades, start making more money. The basic idea is there are locations on a chart that are more significant than others. Whether you realize it or not, I promise you already instinctively understand the concept. Step away from trading for a second and think about someone looking to buy a house. Instinctively, you know the exact same property in a better city, in a more desirable school district, is going to be worth more. Sometimes the difference can be extreme. On the left, we have a 3-bedroom, 1-bathroom, 900 square foot house. And on the right is 22 bedrooms, 17 bathrooms, 18,000 square feet. Flipping through the images, guess how much each is selling for? As it turns out, the house on the left is $3,200 per square foot, and on the right is only $14. How is this almost $3 million while this is only $250,000? It's the difference between living in Mississippi and Silicon Valley. Everyone knows when it comes to real estate, it's all about location, location, location. And yet when it comes to trading, we completely ignore this concept. The exact same hammer pattern means something completely different, depending on if it's at support, resistance, or somewhere in between. I'm sure you've seen videos where they cherry pick the perfect example. Hammer forms at the exact bottom, price magically turns on a dime, and you could have rode it to 1,000% gain. We're on a different chart now and we see EXA has ripped up 2,000%. Let's mark out in red the pullback and see how often the hammer signals would have been profitable without support and resistance. Zooming into just the red section, we're going to use an indicator that'll find all the hammers for us. Search for price action and scroll down until you see CM price action bars. Nothing will happen until you bring up the settings. Check to turn the bars gray, and they call hammers pin bars. Uncheck the red and click OK. All the hammers are now in green. First trade would have been a loser. 2 losses in a row as price keeps moving down. Third trade didn't work out. Fourth one gap down for another loss. Number 5 and number 6 losses in a row. We're getting close to the bottom. Depending on where you had your stop loss, you might have been able to ride it back up, or you might have gotten stopped out. Just put a question mark on these 4 signals. And finally, we get the perfect hammer for a win as price turns back up. Zooming out, we see every trade we took without support and resistance. We lost the first 6. 4 were marginal, and the last candle, which was a winner, is the only candle most videos ever talk about. I'll show you another trick how you can easily identify important levels. Go back up to indicators and search for auto. Scroll down until you see auto support version 0.2. Since we're going long, we only want to take a signal if there's support close to the bottom of the candle. First losing trade we would have avoided because there's no support nearby. Same with the second and the third. Support and resistance isn't an exact science. We still would have taken this 4th trade and lost. Signals 5 and 6 are far away from support. We would have avoided these. The questionable trades are still ambiguous, but look how close the winning trade was to support. This was a textbook bounce. So overall, we have the same number of winners, but dramatically eliminated many of the bad trades. Typically, a line on a chart isn't support or resistance. It's both. If you're looking up, to you that's the ceiling, but to the person standing above you, that same structure is the floor. Whether price is coming from below or above, we want that level to be respected. What we don't want to see is price crash through the levels over and over again. In case you're not familiar with the terms, whether a level is support or resistance depends if you're trading long or short. Here we're buying long, so support is the safety net or the floor below us, and price will face resistance when it hits the ceiling. In this case, we're selling to the short side, so support is above and resistance is below. There's a difference between major and minor levels. We'll get into the nuts and bolts now. I've drawn 12 lines on the chart. Let's evaluate each one and then we'll see how this works on a real price chart. Starting at the bottom, it can be helpful to know where the low is. Maybe price will come back, but for now this low is untested. It's just weak support. Second line has a couple reactions to it, but moderate at best. This third line is really what we want to see. Multiple times where price springs away from it, both from above and below. So far it's been a very strong level. Fourth line had two confirmations, but look how often price went through it as if it didn't even exist. It's a weak level. Next level up is strong because of how many times it was respected. Next couple are weak. Price hardly acknowledges these levels at all. The one above is strong. Price reacted half a dozen times to it. Next level acted as both support and resistance. The level failed a few times, but still moderately strong. Next line didn't have any convincing turning points, making it weak. Level toward the top served as both support and resistance, making it strong. We want to keep the high on the chart as it's been tested 3 times. We're on the daily chart for SVC. Let's turn on the auto support indicator again. These lines aren't written in stone. Some we can keep, others can be improved or even eliminated. Once again, we're looking to see if these levels were mostly support and resistance, or if they were easy to break through. The high is untested. Let's take a look at the second suggestion. There were a few spots where the line was resistance, but no support to speak of. If it were me, I'd lower it just a touch. Now look how it matches up to all the areas of support and resistance. The next level doesn't look very good. We have this large double top poking through and more activity to the left. I'd completely eliminate this line, but the one right below it looks more accurate. Scrolling left and right, there are clear turns up and down, making a strong level. I'm happy with the line right below it as well. Strong resistance with areas of support. The line below this I'd rate as moderate. It represents enough hits, but also misses a fair amount of the peaks. So I'd also draw on my own line to account for these. I'd delete this line from the chart. Price ripped through it 3 times. There's also a large gap between the bottom of the range above. The line above it is weak because it's too messy. Price cuts up and down way too much. Scrolling through some of these other lines, there's clear support and resistance towards the bottom. And after marking the low, this is what we have so far. Chart looks really messy. Delete all the weak lines, and we're also done with the auto support indicator, so we can hide that. Go back to the search and look for support resistance interactive. Notice the blue box at the bottom. We're going to select 5 levels, starting with the strongest ones. Once you apply the indicator and delete the levels we just marked, you're left with this. In reality, support and resistance is more of a tight zone than a line in the sand. The nice thing about this indicator is you can go into the settings and change the percentage threshold to make the area as wide or as narrow as you want. In my experience, I found 2% to be a good compromise. Last thing is I removed the text, and now we have all of our custom levels marked on a very clean chart. So far we've used line charts which only show the close. Let's go through how to use wicks of candles to define our zone. Here, if we just mark the close, we're ignoring a lot of activity that happens close but not right at this line. Switching from line to candle, we see this wasn't actually the high, but there were many rejections slightly lower. After marking these two levels, use the rectangle tool, draw in the range, open the settings, and click to extend right. You can delete the two lines, and now we have a custom range. Now that you know how to set up your lines in the chart, let's talk about the biggest mistake people make when trading support and resistance. Here we have a textbook line. Resistance turns support. We think price will come back down, then we can ride it back up. What a lot of people do is set a buy order at support, stop loss below the lows, run an ABC to take profit, and hope for the best. Instead, we're going to set an alert when price crosses down and reevaluate. I can't tell you how many trades I used to lose when price triggers me into the trade and keeps heading lower. We want to see if it finds new support, and that's when we'll enter. Let's go back to the zone we drew for ETR. Eventually price came back to the area, but we're not going to short as soon as it crosses with stop above the box. Price has clearly been in an uptrend, and there's no sign it's lost momentum. Set an alert for when price moves back below the bottom of the box, and if you like how it looks, then you're free to short. Whether you're a consistently losing trader, break even, or marginally profitable, this next idea can dramatically improve your results. What I'm suggesting you try for the next few months is only take trades either at support or resistance and completely ignore everything in between. For the next 50 trades, put it to the test. Draw out your levels and commit to only taking trades close to your levels and avoid no man's land. The trade on the right might look decent. We're getting over 3-1 and it's not really even that close to resistance. But for now, just stick to the plan and focus on the two trades on the left. There are 3 or 4 other ways people use support and resistance, so be sure to subscribe so you won't miss that future video. Using support and resistance can help you get more precise entries, but you also want to optimize where you're setting your take profit. Click the video here to learn how to make more money on your winning trades. If that's how you've been trading, you might be surprised to learn this is one of the biggest mistakes losing traders make, and here's why.